Hello everyone, welcome back to the RationalInvestor.com's Daily Brief Recap. Supposed to be a good 10-15 minute market overview. Actually, we had a really awesome session today for Daily Brief Recap. Alright, we're live on YouTube, that's good. Really awesome session for our Daily Brief today. The Duke of Albuquerque was giving me praise after we finished. He thought I did an exceptional job today. So, thank you, assistant, and maybe we can get a bling from Mr. Bus Driver. That'll be his sort of way he communicates with us through here. There he is. Another happy face. So, I don't know whether you guys ever know what Kevin's voice sounds like on the free videos, but you know his distinctive bling. All right, so let's try and do a nice little 10-minute summary for you. Some really cool stuff happening in the market today, so let's get to work. Of course, I always like to put together a little chart deck here for you, give you sort of a lead-in as to what we're going to talk about here. So, first things first, of course, as always, we want to watch the US dollar index very closely. She fractaled out there late last week. We got ECB event coming up here tomorrow and Thursday, so it doesn't surprise me seeing a bit of back and forth here. Euro's all over the place this morning. Don't really have any new trade setups there, and my sort of general feeling is probably want to let the dust settle. We might inside bar here and continue lower. We might actually even fractal out and head back up and test the highs. And keep in mind, we have the Fed meeting next week as well. So very busy central bank window here. And on balance, especially for things like stock market, I'm actually thinking that this rally window goes on through the latter part of the month, 25th, 26th, 27th kind of idea, looking for a top in stocks. So I think it's never a straight line, of course, and even in the stock market today, we're pulling back a little bit in the big indexes. But I do see... and in the daily brief today, I talked to the audience about this. Do you trade the stock market or do you trade a market of stocks? We'll talk a little bit more about that in a few minutes, but long and short of it here, I think this is a market of stocks. And if you can get out there and hunt setups and trade location and all that kind of fun stuff, you should be rewarded nicely through this window. So moving on, one part of the market that has me very fearful is this sort of risk-off proxy. Today on the screen, I happen to have on the gold market and the bond market. I had sort of said in recent videos that I wasn't quite ready to consider trades per se, but definitely a cautionary note. And of course, I think actually I have the chart, but it's always a question of just finding it on here. Yeah, here is sort of a zoomed out look on gold, yen, and the bond market. And I got to say, everybody in the public should be aware of this. These markets are looking extremely risky. We'll talk more about 50% rules when we come to Bitcoin. And just such a fabulous example we can show you today of that 50% rule. You can see where the 50% rose. This is just off the 52-week range of where bonds, yen, and gold are. And I hate to say it, I know all the gold bugs are going to hate me for this, but I actually could easily see, even from these current levels, I could see the gold market fall another 10% here. Never does it in a straight line, and as you can see on the charts, I've actually drawn reload zones. And I find it fascinating, I haven't done one on the yen here, but I find it fascinating on things like the bonds that we actually have a whole bunch of, this could be like a confluence of levels. In that, I don't know whether this is the extent of the sell-off. We might have to come further. I don't know. It's tough to say. But counter trend rallies back into reload zones. Notice we have a really big gap that needs to be filled on these this bond ETF. We've got horizontal support and resistance from previous highs up in this area. So if we can get some sort of counter trend rally back up into this window, I'm actually going to start hunting for that trade. You can see where the 50% rule is. And, actually we do Tuesdays. We have our TRI secret options formula meeting, and you can see, I think that there might actually be a potential trade setting up for us here. And that's not only in the bond market. Yen, I'd rather see a nice really rally right back up top. I might take a look at puts there. And then the gold market, oh my goodness, this looks like Swiss cheese. I know some people are going to be critical of me using the ETF. Actually, this is the bond market. Did I get that backwards? Here's the gold market. Here's the gold ETF, and oh my goodness, this thing, it's just got holes all through it. So same sort of logic, reload zones, counter trend rallies. Notice there's a cheeky little gap right up there, horizontal support and resistance. If I can get any kind of counter trend rally back up into this window and start seeing signs of failure, maybe a nice M up here, oh my goodness, this has got TRI SOF written all over it. And what I also like about this trade, not only 50% rule, but look at the hole in the charts. I mean, alpha 50% rule, and then the previous market structure breakout level. I don't have an outright top here yet, and I still think there needs to be a test of this high before trades start developing. But I got to tell you, this is starting to look more and more compelling with every passing day. And then I think I showed you guys yesterday, but I talked about it lots in the daily brief. November's usually a bit of a tough time for the gold market, so a nice little correction into that window would make perfect sense to me. So I'm going to be watching this market really closely in the weeks coming ahead for a potential short setup there. Moving on, and then of course if you want to play the exact opposite through today's daily brief, we talked a little bit about the dust, which is the inverse, and you can see 50% rules of this 52-week range. Holy for holies, there is a lot of money. Still no W here yet, so we want to see a nice solid bottom to work with, but I think there's a trade developing here, so keep your eyes peeled, folks. Moving on. Now, interesting commentary here in the stock market. Like I said, cycle-wise, I'm still thinking that we just went through a bottoming phase, and the market should rally into this pivot here, coming up here mid-end of September kind of time period. I have put myself on a S&P 500 put option buying program. I bought one. I'll be buying more as we go through into this window. But the one area of the market, and again, remember I had said earlier, is this a stock picker's market? I think it is. Are you trading the stock market that's just buying the indexes, or are you trading a market of stock picker's market? And a really good sort of analogy of that, I think, is if we take a good look at things like the Russell 2000. The S&Ps are banging around here, not really doing a hell of a lot, but I do like the momentum that I'm seeing coming out of the small cap market. We're also seeing that to a certain degree with crypto. We'll talk a little bit about that. Are you trading the crypto market, or are you trading a market of cryptos? I think, it's the same case there as well. So I am seeing outperformance out of things like the smaller cap stocks. You can see the small cap Russell 2000's up on the day, even though the S&Ps are down. And, just to that end, tooting TRI's horn. And I got to tell you, our TRI SOF club is just kicking ass lately. I mean, it's just stunning watching these wins. This was one that Casey, awesome. I've showed you guys Casey's tea. It's rocking and rolling. We won't talk about that today. But here's just such a great analogy of what we do. Hunt for those W's. Hopefully everybody here. And this was actually one that I didn't talk to you guys in the public about when we put the trade on, because I was kind of like, we got to get all our fills first before I start talking to you in the public about this. And then I never got around to telling you guys in the public. So maybe it pays to be a site member, because, of course, on the site we're talking about these setups all the time. But hopefully everybody can see here, right? Just, it's not rocket science. Just a low, rally away from the low, pull back, test the low, but don't go to new lows, and then a big W breakout. So the cool part about it is the market broke out, and it even gave you, I mean, check this out. If you can learn these reload zone concepts, oh my goodness, it's ridiculous. So notice that the market pulled back right into a nice friendly reload zone right here. And just gave you just a sick ass fill. And this is where we got our options, because we never chase price with options. We always work our order at our specific price level and then just live with the results. So we needed this pullback to get our fill. We got our fill, and holy crap, this thing has just taken off like a rocket. So what a beautiful trade. TRIers banging out doubles right, left, and center. Beautiful to wake up and everybody's reporting profit, orders being filled. I mean, is there any better way to run a website, to run a site about trading than wake up in the morning and everybody's happy because they're making money? I mean, just wow, what a cool story. And from what I understand, the irony of all this is that the scuttlebutt is that people in the public are sick and tired of these unicorn stories that aren't producing anything. They're not brick and mortar. And so a lot of these sort of brick and mortar, maybe we're going to go to a shopping mall and actually shop in a shopping mall. Remember those days? They're starting to catch levels. Now check this out. When I zoom out on this chart, watch this. I mean, do you think this thing's got any more room to run? Look how far this stock has fallen. I mean, it just keeps going and going and going. I mean, and going and going. I mean, I'm not calling for these kind of levels. And all I've done is I've just zoomed out. Well, actually, this is going back a few years. But anyway, I would feel totally comfortable and I would just be pleased as punch if we just did a 50% retracement of this range. So that actually realistically means that I could shoot for like $6.50 a share. And just like I showed you on that gold chart, gee whiz, look, there's a big hole on the charts right at that 50% level. And it was also the original breakdown level from, this top and this top. I think it's actually, there's also a hole on the charts right up here. I actually don't think it's out of the question to be looking for a rally up into this window here. So what a great treat here this morning. Brian's tooting his own horn. But I got to say, I mean, TRI, 1 + 1 = 3. This is the crap that you're looking for. We want to see winning trade ideas. So way to go, TRI. Way to go, team. Casey just bringing it with these ideas. And we have another TRI SOF meeting tonight. And he said he's got another name in his back pocket that he wants to show us. Finish off conversation, of course. You can't have a conversation without a little bit of touch on good old corn and crypto. And it was kind of a fun. I won't go into too much detail. I'll just sort of tease you guys. But on the site last night, we were picking apart the corn chart and trying to look at it from a fib spiral perspective and trying to understand the logic of how the matrix works. We've almost got it figured out. I can start seeing the code coming down the walls. But this is a really good analogy. The fib spiral works well with this triangle theory, that in essence the entire universe is built on triangles. And you can take this all the way down to infinity. But, really cool analogy that if you actually took the Bitcoin low off of the 2017 bottom, and what was really interesting, I even quizzed the people through the daily brief. Do we even remember the SEC's initial rejection of the Bitcoin ETF? That was this date right here, way back when Bitcoin was around $1,000. And it wasn't that long ago. That's the weird part about all this. But I think that that's probably the base of our study here. And then if we zoom out, what a coincidence. Price is sitting here at 10,204, and we look at 50% rules. Mr. Gann sitting 10,317. I mean, ironically enough, you can actually make the argument that the market is just basically parked on its 50% rule. The fib spiral suggests that this consolidation correction comes to an end here somewhere around March of this coming year, which means we probably have another 6 months of malaise ahead of us. I still think that we could get that dip if we do 50% rules of this range. I've talked to you guys in the public about that. I could very easily see a dip down to that 50% level there, 8,500. But really, I don't think this market gets going either bullish or bearish until we actually finish this spiral, because in essence, the spiral is the bull market cleaning itself up. It's basically the way the universe works. I thought it was so cool. So, long and short of it here, Bitcoin is parked. Remember I'd said earlier, are we trading the crypto market or are we trading a market of cryptos? I get the feeling that while Bitcoin is sort of parked at its 50% rule of its entire range, and we're waiting for this to finish, that I think we're actually in a crypto pickers market. I don't know whether this trade idea is going to work. I mean, nobody does at the end of the day. But really interesting to see, on the news wires this morning, I was reading that things like Ethereum are actually secretly going about building out their 2.0 offering. And the sort of news out here is that actually it's moving along a lot faster than people had previously expected. And I think this is a really cool little crypto panic. Kevin showed me this site the other day. Really good sort of summary of what's going on in the crypto market right now. And if we look at Ethereum, and the other day we were kind of like, well, why on earth is Ethereum double bottoming here? And now, hearing the news about things like, well, this testnet is coming along, 2.0 is a lot further along than expected, I think the market is actually trying to speak to us here. Now, like I said, I don't know if this trade's going to work, but I will say that if you are a risk taker in the market and you are putting yourself in harm's way, taking a risk, now is the time that you actually can seriously take the risk. You don't know if this W is going to hold, but I would say statistically, the odds of this working, remember I just showed you that crazy little stock just the other day, it's exactly the same thing. We had no way of knowing what was going to happen here when this W came in. But we're risk takers. We define our plan. We hunt these W's on signs of divergence at good location. And you can see the end result. You just don't know what's going to happen in this world. But my closing message to all of you is, I think now is the time when you really want to focus. You want to hunt these W's. And if you're going to take a risk in the market, now's the time when I think it's appropriate to take the risk. But having said that, this isn't financial advice. This is just purely Brian's opinion. You got to build your plan. You have to vet your plan. You have to identify what it is that gets you to act in the marketplace. And then when this stuff comes in, you got to act. It's just that simple. So, food for thought. All right, I think we'll leave the summary at that for today. Good luck in following those trading plans and making Brian proud that you're acting like a professional in the market. All the best, and bye for now.